Welcome to Pip Insight Macro, the economic calendar briefing for the daily Forex news. Today is the 27th of July, 2026. This session has 1 high-impact and 0 medium-impact releases coming up. Let's run through exactly what's on the calendar and what it means for the major currency pairs. The German IFO business climate hits at 4 o'clock Universal Time Coordinated. Watch for early directional cues on the euro. Welcome to Pip Insight Macro. You're watching the daily Forex news. Today we're tracking 8 economic releases across euro, British pound, and US dollar pairs, with a focus on euro strength and European economic sentiment. Let's break it down. Here is the full economic calendar for the daily Forex news. We have 1 high-impact releases due this session. Let me walk you through each key event and what it could mean for the markets. We've got RBA Governor Michelle Bullock taking the MIC today, and this is a high-impact event for Australian dollar traders. Her commentary could reshape market expectations around interest rates and monetary policy direction. Any hints about the RBA's next move will send ripples through Australian dollar pairs across the board. Governor Bullock's speeches are critical because she sets the tone for Reserve Bank of Australia policy and signals where rates might head next. Markets parse every word for clues about inflation concerns, economic growth outlook, and the timeline for potential rate cuts or holds. A hawkish speech, suggesting rates stay higher for longer, typically strengthens the Australian dollar as it makes Australian dollar-denominated assets more attractive to yield-hungry investors. Conversely, dovish comments about economic softness or lower-for-longer rates would weigh on the Australian dollar. Traders should watch for specific language around inflation trajectory, labor market health, and global economic headwinds, as these directly influence RBA decision-making. Key price action zones to monitor: look for volatility spikes in the first 15 minutes post-speech, then consolidation as the market digests her messaging and reprices rate expectations. Aussie dollar is your primary pair here. A hawkish Bullock typically pushes this pair higher as rate differentials favor the Australian dollar, while dovish remarks send it lower. Euro to Australian dollar will move inversely, with risk-off sentiment from dovish comments likely benefiting the euro as safe haven flows kick in. Watch for 50 to 100 pip swings in both pairs depending on the surprise factor of her statements. We're looking at the German IFO Business Climate Index, a key gauge of business sentiment across Europe's largest economy. This monthly survey gives us real insight into how German companies are feeling about current conditions and their outlook ahead. The forecast is calling for a reading of 86.1, up slightly from the previous 85.6, suggesting modest improvement in business confidence. With a low impact rating, we shouldn't expect dramatic market moves, but any beat or miss could still spark some short-term volatility in euro pairs as traders digest the health of the German economic engine. Euro-dollar tends to be the most responsive to German economic data, so that's the pair to watch most closely for any meaningful reaction. We're looking at the European Central Bank's M3 money supply data, which measures the broadest money circulating in the Eurozone economy. This is a key inflation indicator that traders watch to gauge monetary conditions and potential policy shifts. M3 is expected to hold steady at 3.2% year-over-year, matching the previous reading, suggesting stable monetary growth in the Eurozone. With a low impact rating and no surprise in the forecast, we're unlikely to see dramatic volatility today. However, any significant deviation could hint at underlying economic stress or strength that might catch the market's attention. Euro-dollar will likely be the most responsive pair if there's any unexpected movement in this data, as it directly reflects Eurozone monetary conditions versus dollar dynamics. We're looking at private loans year-on-year data for the Eurozone, which measures the growth rate of credit extended to households and businesses. While this is a low-impact release, it still gives us valuable insight into consumer and business confidence across the euro area. The forecast comes in unchanged at 3.1%, matching the previous reading, so we're expecting stability in lending growth. With no surprise in the data, we should see relatively muted price action across the major euro pairs, though any significant divergence from expectations could prompt modest adjustments as traders reassess credit conditions in the eurozone economy. Euro-dollar typically leads the reaction to euro-specific data, so that's the pair worth monitoring most closely for any meaningful movement. We're monitoring the ECOFIN meetings today, where finance ministers and central bank officials from across the Eurozone gather to discuss economic policy and fiscal coordination. While these meetings don't always move markets dramatically, they can shape the broader narrative around European monetary and fiscal direction. The ECOFIN meetings typically have a low impact on intraday Forex volatility since there's no hard economic data release or official decision announcement. However, any commentary about Eurozone growth, inflation concerns, or policy divergence between member states could spark some modest directional interest. Watch for statements that might hint at future ECB policy shifts or fiscal coordination efforts. Euro-dollar is typically the most sensitive pair to any ECOFIN commentary, as it reflects broader sentiment about Eurozone economic health versus US fundamentals. We're looking at the CBI realized sales data for the UK, which measures the actual sales performance reported by retailers across the country. This is a backward-looking indicator that gives us insight into consumer spending strength in the retail sector. Today's forecast came in at -45, compared to the previous reading of -54, so we're seeing a modest improvement in the data. While this is a lower impact release, any improvement in retail sales can signal growing consumer confidence. We might see some mild British pound strength if traders view this as a positive sign for the UK economy, but don't expect dramatic volatility from this one. Pound-dollar will likely be the most responsive pair if there's any meaningful reaction to this data. We're looking at core durable goods orders for the month, a key indicator of business investment and manufacturing strength in the United States. This data strips out volatile transportation orders to give us a cleaner picture of underlying demand. We're expecting a reading of 0.9% month-over-month, down from the previous 1.3%, which would suggest a slowdown in business spending momentum. Since this is a low-impact event, we shouldn't expect dramatic volatility, but any significant misses could add to broader concerns about US economic momentum and potentially weaken the dollar across multiple pairs. Euro-dollar is typically the most responsive to US economic data surprises, as it directly contrasts growth expectations between the Eurozone and the United States. We've got durable goods orders coming in today, which measures new orders for long-lasting manufactured goods like machinery and equipment. This is a key indicator of business investment and economic health, so traders watch it closely for clues about future production and spending. The forecast is showing a rebound to 1.6% after a sharp -4.5% decline last month, which would suggest stabilization in business demand. However, this is flagged as low impact, so we're likely looking at modest dollar reaction unless the number surprises significantly in either direction. The takeaway for traders: this is more of a confirming indicator than a market mover today. Dollar-yen tends to be most sensitive to shifts in US growth expectations, so that's the pair worth monitoring if we see a notable beat or miss. We've got the BRC Shop Price Index coming in today, which measures year-over-year inflation at the retail level across British shops. It's a key indicator for understanding consumer price pressures in the UK economy. This one came in at 1.2% year-over-year, matching both the forecast and the previous reading, so we're seeing stability in retail pricing. With low impact and no surprise here, we shouldn't expect any dramatic market moves, though traders will still note this as confirmation that UK retail inflation remains steady and controlled. Pound-dollar is typically the most sensitive to UK-specific economic data, so keep an eye on that pair for any minor directional cues. Based on today's releases, the pairs most at risk of volatility this session are Euro-dollar and Euro-pound and Euro-yen. Here is a breakdown of why each pair is in focus. That wraps up the complete daily Forex news economic calendar breakdown. The key theme today is European data flows, Euro sentiment under scrutiny. Keep a close eye on the release times. A surprise deviation from forecast is often where the real moves happen. This is educational content only. Trade safely and manage your risk. That's your daily Forex news wrap. Please like and subscribe for more educational market analysis. Follow us on X at @ForexInsight. Thanks for watching.